สวัสดีค่ะยินดีต้อนรับเข้าสู่การนำเสนอข้อมูลประจำปี 2021 ของบริษัท PSL Shipping จำกัดมหาชนหรือ PSL ซึ่งการนำเสนอข้อมูลจะแบ่งเป็น3ส่วนโดยคุณคาริทาชิมกรรมการผู้จัดการจะนำเสนอข้อมูลในเรื่องของภาพรวมของอุตสาหกรรมและตามด้วยคุณกอตั้มกุลนากรรมการทางด้านการเงินจะนำเสนอข้อมูลในเรื่องของตัวเลขผลการดำเนินงานตัวเลขทางการเงินและในส่วนสุดท้ายคำถามคำตอบที่จะมีเข้ามาซึ่งสามารถคีย์เข้ามาทั้งได้ทั้งภาษาไทยและภาษาอังกฤษนะคะงั้นเรามาเริ่มในส่วนแรกกันก่อนเลยโดยคุณคาริทาชิมค่ะ
สวัสดีครับ So the first slide that I have for you is showing you how the BDI has reacted, and if you look at this slide you can see it's a very nice V-shaped recovery, and because supply and demand during 2021 became fully in balance, any small change in demand or supply makes a big up and down volatility in the market. If you look at this slide, it shows you that for last year, the growth rate on the demand side was 4.18%. Against that, on the supply side, the gap was down to 3.55%. So the net gap between demand and growth and supply growth was almost 60-70 basis points. And that was enough to push the markets up very sharply. For next year, the demand is supposed to grow, or this year rather, the demand is supposed to grow by 2.2% and supply is supposed to grow by 2%. So there is a gap already here, and that gap will widen with the inefficiencies in the because of congestion and other COVID-related protocols. If you look at the growth rate of just minor bulks, is at 6.2% for last year, against a supply growth of only 2.45%. So a much bigger gap here, and that's one of the reasons why the smaller geared ships like the Handies and the Supras did much better than the bigger ships. Similarly, for this year, the growth rate for minor bulks is at 3.1%. Against that, the growth rate in the net supply is expected to be 2.54%. Therefore, again, another 60 basis points the gap is there between demand growth and supply growth. If you look at the cargoes that we carry, you can see clearly that we carry so many different types of cargoes that there is no concentration risk. So that's the first thing. Second thing to note is that because of these cargoes that we carry, we do not have any issues calling at different ports with these cargoes, and therefore for us, demand growth and supply growth being as they are, we should fare really well in the next 2-3 years' time. This shows you the type of cargoes each sector of the dry bulk market carries. For example, if you look at the Cape sizes, they're 74% of the time carrying iron ore, 21% of the time carrying coal. So basically, their dependence on just these two cargoes is 95%. If you look at Panamaxes, they've got 9% for iron ore, 49% for coal, and 28% for grains. They carry 13% of minor bulks. If you look at Supras and Handies, what do you see? It's just the opposite. You see that for the Supras and Handies, they carry minor bulks 55% of the time and 65% of the time, versus that they carry grains 17% and 22%, and coal at 22% and 10%. Very little iron ore is carried by Supras and Handies. So therefore, if there is a slowdown in steel production, which requires iron ore and coal, the Capes and Panamaxes get hurt the most, and the Handies and Supras don't really get affected. If you then look at the forward order book, it's at 65 million deadweight tons, which is 6.9% of the existing fleet at the start of this year. If you broke it down to the geared and gearless sectors, you would see that the geared sector was at 5.76%, and the gearless sector, or the bigger ships, were at 7.5%. And on a visual basis, you can see these are much stronger growth rates than this side of the graph. If you look at the dry bulk fleet at the start of 2022, what happened during last year? They grew net by 32.16 million deadweight tons, or 3.55%. But if you examine the internals, you will see that the Handysize grew by just 2%. The Supras grew by about 2.84%. The Panamaxes grew by almost 4%, and the Capesizes grew by above 4%. So you can see clearly that growth is stronger in the gearless sector and weaker in the geared sector. This is what happened last year, and it shows you the growth rate over here. And based on these numbers, we expect a growth rate of about 2.11%. But all the reports that we are reading currently indicates that our assumption of 8 million deadweight tons of scrapping is on the low side. Many other brokers have been calculating this at anywhere between 11 and 16 million deadweight tons. So let's see what happens as the year progresses. If you look at the overall picture since the turn of the century, what do you see? You see that we started out in the year 2000 with 274 million deadweight tons of ships totally. And by the time we started out in 2022, it had risen to 939 million deadweight tons. And the main thing which you must notice over here is that the forward order book to fleet ratio peaked at 78% at the start of 2009. If you looked at it specifically just for the handy-size sector, you would see that our order book to fleet ratios are 3.35%, but the existing 20-year-olds today are at almost 14%, and the like-for-like at the end of 2024 is at almost 17.5%. So there will be a shrinkage over here in deadweight ton terms when the cargoes carried by these ships, which are not going to be there anymore in the future, will flow into the Supramax and Ultramax sector. And in the meantime, as minor bulk is growing at a faster speed, you'll have more cargoes here and more cargoes here. Now, if you look at the Supra Ultramax space, what do you see? You see that the order book to fleet ratio is at 7%. The existing 20-year-olds are at 10%, and the 20-year-olds at the end of 2024 are at 14%. So again, you see that here at best, there will be replacement of older ships taking place, but no real growth in tonnage. So what is our strategy? Our strategy is to try and fix ships on longer term contracts at rates which are not significantly discounted to the current market. So if you look at last year, we had an average rate of $16,272 per day per ship for about 2,304 days, which was the total pre-booked or long-term contracts. For this year, you can see it's already up to 18,400, and the number of days has gone up from 2,300 to almost 3,000. And these two numbers, if you multiply this number by this number, you will come up to the total contract value of the forward order book in each year. So I want to then show you the differences between the super cycle, the bad times, and today. So if you look at these 3 time periods, this is when the super cycle was there in the last bull run. Then there was the 11 years or 12 years of really bad times, and then 2021 came in with good numbers. So if you look at just the earnings per day per ship, you can see that the Capesize is still at just 50% of what it was in the last bull run. But if you look at Panamaxes, they're about $5,000 lower than the last bull run. If you look at the Supras, they're almost the same value, just $1,000 difference. But the handy-size is the big surprise. It's almost 1.5 times what it was in the last bull run. Now, if you look at the macro picture, the demand growth during this period of time averaged on an annual basis 5.4%. And during the bad times, it averaged 4.2%, and today it's still averaging 4.2%. Now, if it averaged 4.2% during this period of time and we had such lousy rates, what explains the fact that this was the same annual average growth rate in 2021, yet the rates were this high? And the only explanation is that at the start of 2021, the demand and supply came into full balance. Now, if you look at the macro picture, what do you see? In terms of the order book to fleet ratio during this period of time, it was averaging on an annual basis at 36%, more than almost double of what it was for the 20-year-olds at the start of each of those years. And if you look at the net growth in supply, it was almost 7% per annum. When you come to the bad times, the net supply growth was almost 6.5%, and that explains why, though demand was growing at 4.2%, supply was growing at 6.4%, and that's why rates remain very depressed. And the reason for that is, of course, all this extra supply that was ordered over here continued to remain over here at 26%, more than twice the 20-year-olds. But when you come to 2021, what do you see? At the start of the year, the forward order book to fleet ratio was just 7%, Against that, the existing 20-year-old was 6.25%, and the net growth in supply was 3.55%. Now, how does that compare with 2022? At the start of the year, the order book had gone up to 6.9%, but at the same time, if you look at the 20-year-old fleet, it had reached 7.3%. So it was now, for the first time, this ratio had reversed compared to what was there in the past. If you look at the rates that were there in 2021, you can see what the year started out with and how it peaked in the fourth quarter, at the start of the fourth quarter, and then came down towards the end of the year. Now, so what can we read from these numbers? We can say that the upward momentum in the freight markets continued very sharply during 2021, as demand and supply were in perfect balance. GDP growth rates in China and the rest of the world started to rise sharply, and that pushed up the demand side, and therefore, because demand and supply were in perfect balance, rates went up very sharply. Congestion peaked in Q3, at the start of Q3, at 6.3% above the 7-day moving average during 2016 to 2019, and averaged out at 4.6% during 2021. And the speed of the rise of the freight market in 2021 took everyone by surprise. Now, what happened towards the end of the year and the start of this year? First of all, you had the real estate developers in China going for a toss, and China not trying to help them because they wanted to bring them under control. Now, China also, in the start of the fourth quarter, started putting strict limits on polluting industries like steel, cement, aluminum, coal, and coal-fired power plants. Steel production slowed, power shortages magnified, and blue skies were required during the Winter Olympics. Then now, because of all of this, China's PMI started to slow down. Now, to rectify this, in the month of November onwards, China increased coal production, increased coal imports, capped coal prices, relaxed emission rules, and increased power for residences or homes, and reduced power for industry. So industry continued to suffer in the fourth quarter. Now, in the rest of the world, what happened? Central banks started tapering QE and started interest rate hikes in 2022. For example, in Britain, you will have the third hike taking place most likely this month when the Bank of England meets. So what was the result of these two negative news? The result was congestion dropped during Q4, and therefore the rates became weaker, though remained very healthy in Q4 as well as in the start of Q1. Now, keep in mind, all the above negatives are government interventions in markets, but not a collapse of demand, so can all be reversed quickly once the governments reverse their decisions. So we expect by Q2 2022, we think China's real estate crisis will have passed, power will be back more evenly distributed, industrial production will go back up to its trend line, and Chinese GDP will be back at above trend. And then you will once again be very surprised at the speed at which the rates go back up in 2022. Now, what we've given you here is the following statistics. When was the Cape size rates at a peak? So this was on the 7th of October. And then it fell 93% to $5,826 by the 26th of Jan. So you can see that fall over here. And then by the 11th of Feb, it was up to 15,397 or up 164%. However, if you look at the Capes today, or as of yesterday, this was down to 110%. Similarly, if you look at the Panamaxes, they peaked on the 25th of October 2021 at $39,000 a day, dropped to a low of $15,000 or $16,000 on the 2nd of Feb, 59% down. And then on the 11th of Feb, we're at 2163 or up 36%. Since then, the Panamaxes, as of yesterday, have come down to plus 35%. Then if you come to the Supras, what do you see? You see the peak on the 21st of October at $40,000 a day. Then it dropped down to $17,000 a day on the 2nd of Feb, or a drop of 57%. And then on the 11th of Feb was up to $24,000 a day, or up 37%. As of yesterday, this number had gone up to 48%. If you look at the handy size then, what do you see? You see $37,000 at the peak on the 25th of October, falling by 52% to $18,000 on the 3rd of Feb, and then going back up to $21,000 on the 11th of Feb, or up 18%. Since then, as of yesterday, the handies have gone up by 26%. So handies are improving quite sharply. The current market situation. So if you were to compare the Q1 results of the index ships in 2021 and compare it with the last 10-year averages, you can see how they have improved. And you can see that over here in a visual format. So these lower bars are the values of the 10-year average for each of the quarters. And then the second set of bars shows you what has been the average during 2021. And that's the same for Capes, Panamaxes, Supras, and Handysize. Similarly, if you were to see how rates have changed between quarters and gone up in 2021 and in the last average 10 years, and then compare it with how the rates have changed in 2021, you can see that in percentage terms and in absolute terms. So you can see that over here also, that this is the way the rates have gone up in percentage terms. Why did dry bulk ships were not ordered in large numbers in 2021 if you compare them with 2020 and 2029, even though rates went ballistic in 2021, but the ordering did not skyrocket? So the reason for that is the 12-year drought removing money for investment. Secondly, the container, tanker, and gas ships crowded out the dry bulk ships, and therefore there was no space left in the shipyards. Thirdly, shipyard capacity came down significantly from 261 to 89, and these could only deliver 433 dry bulk ships in 2020. And of course, the most important, the fourth point, the new regulations that are already there, they will expedite the death of the internal combustion fuel oil burning ships before they reach the end of their economic lives. Now, coming to quarter 4, if we just compare the index ship numbers with our numbers for quarter 4, you will see the handy size, we were down compared to the index by 20% and 8.25% down compared to the Supramax index. But there were 3 reasons, 2 reasons for underperformance, 1 and number 3, and 1 reason for outperformance. So what were the reasons? First of all, our ships are different, and therefore you need to discount the index ship by 25% to reach a handy ship on an apples-to-apples basis, and for the Supras about 10% discount. The second factor, of course, is good for us, that if you fix your ships on the first day of the quarter 4 and then compare it with the index average for the quarter, you'd see that you'd outperform the average ship by 14% and in the handy side and 22% in the Supras. The third factor which is against us is the number of ships fixed on long-term charters. And they were fixed on there were 7 handy size ships fixed out of 19 at $19,000 a day, and 1 Supramax fixed at $13,421 per day. Compared to that, the index levels were 31,370 and 30,472 respectively. So if you applied these 3 factors on a mathematical basis, you would come down to this true performance. We beat the handy index by 4%, and we were below the Supramax index by 13%. Now this is for quarter 4, but if you did the same thing for the whole year, you would see that just on the numbers, the handy was down by 27% and the Supras were down by 18%. Against that, if you take these 2 factors, which I've already explained to you before, and applied them, you would see that our overall performance on the handy sizes goes up to almost 8% above the index, and the Supras comes almost to the index level at minus 4%. Now, this slide shows you how congestion has grown over the years. So if you remove the outlier years, that is 2010, and remove 2015, 16, and 17, and then look at this period of time between 2010 and 2021 on the 12 years, what do you see? You see that the average would have been just 4.3%. Therefore, if you look at the rate for 2021 at 4.6%, it is not much above the average rate. Therefore, when the media and the analysts keep saying that congestion was the main reason that the markets went up in 2021, I think that is not very accurate. The more accurate reason is that demand grew stronger than supply, And the main reason is that demand and supply had come into balance by the start of the year. And that's what pushed the market up. So what's the industry takeaways? The good news, supply-demand balance was reached in 2021. BDI peaked at 5650 on the 7th of October, starting from 1374 points at the start of the year. Material improvement in dry bulk demand rates, and we think this will continue all the way through to 2025. The BDI reacted positively to the strong world GDP numbers as well as the $20 trillion stimulus plan put in place to combat COVID-19. And time charter rates in 2021 were higher than at any other time in the last 10 years. New ships ordered in 2021 are up on 2020 by 62% and by 46% against 2019. But if you just look at the geared ships, it's actually down by 6% against 2020 and up by 49% versus 2019. What is the bad news in 2021? Rates declined after reaching a peak on the 7th of October because of negative news from China as well as from the rest of the world. But what do we see? We see that because of this negative news, Q4 congestion dropped. Weaker yet healthy rates were there in Q4 and Q1. And above negative factors are only because of government orders and not because of collapse in demand, and can be easily reversed. And we think that by the end of Q2, you will find that the China real estate crisis will have passed, China power will increase, China industrial production will be up, Chinese GDP will be back at above trend, and you will be back at the start of 2021 wondering why you are so surprised that rates have gone up so sharply in 2020. Now coming to COVID's impact. If you look at the liner industry or container business, you see that they made an operating profit of $190 billion during 2021. And in 2022, it's expected to go up to $200 billion. So there's going to be no relief from rates in the container liner business. Maersk declared a $24 billion operating profit. ONE, which is a conglomeration of all the three Japanese lines, is expecting a full year net profit. Their full year ends on the 31st of March, expecting a full year net profit of $15 billion. And Hapag-Lloyd is expecting a $13 billion operating profit. If you look at dry bulk, you can see the V-shaped recovery and the fact that 2021 rates have gone up very sharply. New regulations coming in, EEXI and CII. So what is EEXI? Energy Efficiency Existing Ship Index. It's a one-time technical adjustment. It comes into force on the 1st of January 2023. People expect somewhere between 70 and 90% of all dry bulk ships to be impacted by this. In our fleet, we expect somewhere between 40 to 60% of our fleet which will be impacted, and we will have to employ engine power limitations on those ships, which will vary from 25 to 40% on each ship, and the speed reduction would be approximately 2.5 to 3.5 knots on each ship compared to the speeds used in the second half of 2021. How much will it cost us? Approximately $1 million for the whole fleet. It works out to $6,000 per ship that is compliant and $37,500 per ship which is non-compliant. So what are the implications for the effective supply of ships? Every 1 knot with speed reduction equates to 5.5% net reduction in effective supply of ships. Now this is based on 200 days of sailing time. If it's more number of days, this reduction will increase. What is CII? It is an operational efficiency index. It takes effect from 1st January 2023 and will annually reduce at about 2% per annum starting out in 2019 and going all the way to 2026. How many ships in the world would be affected by CII? About 30,000 ships. Remember, this is for all ships in the world, not just dry bulks. And the reason for the fewer number of ships over here is because CII does not apply to ships which are 5,000 gross tonnage or smaller. So roughly for 20,000 deadweight tons of ships or smaller, it does not apply. How will PSL control CII for its fleet? We will do it by optimizing operations through weather routing, to dry docking the ships regularly, to cleaning and painting the bottoms of the ships so that they have the least friction during the sailing in the water, and generally keeping the engines in good conditions. So now Gautam will take you through the financials of the company.
Thank you. So a couple of highlights of what we did last year. So PSL, we've entered into new long-term charters. These are index-linked charter contracts for 4 vessels, for vessels of that size. We've also actually entered into 2 additional index-linked charters this year. So this will allow us to capture the upside in the market when it happens, although it also exposes us to the risk of a fall in trade rates when rates decline. We've declared a 50 satang dividend and paid on 13th December. We've also declared an interim dividend of 50 satang to be paid on 11th of March. And also we have recommended to the AGM to pay a final dividend of 25 satang to be paid tentatively on 28th of April after approval. So total dividend for the year 2021 is 1.75 baht. Here's our financial profile. So you can see our cash position at the end of 2021 was a very healthy 73.9 million, up from 36.6 million in 2020, and also somewhat similar figures for previous years. Our total net debt stands currently at 172 million, down quite significantly from 281 million in 2020 and 400 plus million in 2017 and 2016. Our equity has gone up to 429.8 million, up from 337.4 million as a result of the net profit this year. The number of vessels that we have on our fleet has remained the same at 36. Our EBITDA for the year is 175 million, up from 36 million in 2020. So it's really the best EBITDA that we've had in a long time. Our debt to EBITDA ratio is down to 1.49 compared to 8.4 in the previous year. And this is because of very high average daily earnings, which for the year came in at 20,338, up from 8,332 in 2020, and similar figures in the previous years. Our daily operating expenses are up to 5,090 for the year compared to 4,705 in 2020. Net profit for the year was 137 million, a reversal from the loss of 40.8 million in 2020. Total revenues for the year came in at 272 million, up from 119.9 million last year. This is a breakdown of our operating expenses. So our operating expenses for the year for 2021 came in at 5090, and this was above our target for 2 reasons. Number one, our manning expenses were higher. This is because of COVID-related delays that our crews have had to experience. They had to undergo quarantine at various ports around the world. That added to the cost. And also we had some breakdowns of a particular type of engine last year, and that added to additional stores and spares expenses. I should say that we've identified the root cause of these breakdowns, and I expect that both these figures will decrease over time. So our OPEX target for 2022 is 5050 per day. So this is a comparison of PSL's operating expense compared to the industry. You'll see that our crew costs are actually quite similar to the industry, but on other factors, our costs are much lower. So the last year where the industry figures were reported was 2020, where the industry average operating cost was 4,900, ours was 4,095. Now every $100 in savings on daily operating costs translates to $1 million on the annual bottom line. Now this year the operating cost is up, but that is because of reasons that are COVID-related reasons which are affecting everybody in the industry. So I expect that the differential that we'll have with the industry will not really change very much. So here are the financials are looking at it also on a quarterly basis. You'll see for the 4th quarter of 2021, total revenues were at 84.47 million, up from 80.53 million in Q3, and significantly up from the 34.3 million figure in Q4 2020. The net profit for the quarter was 53.01 million, up from 45.4 million in Q3, and up significantly from the 0.9 million profit in Q4 2020. The net profit, excluding non-recurring items, came in at 52.68, up from 46.51 EBITDA for the quarter came in at 62.42, up from 57.35 in Q3. Average TC income per ship per day was a very healthy 26,429 per day, and this is despite the fact that one of our ships, the Chayani Nari, is stuck in Nigeria. This is up from 24,722 in Q3 2021 and 10,022 in Q4 2020. The net profit margin that we had for the year was 62.76, up from 56.37 in Q3 2021 and 2.63% in Q4 2020. The earnings per share for the quarter came in at 1.14, up from 0.96, and for the full year it was 2.87. Just some more highlights. So our cash position, as I said, is 73.85 million. It's a very, very healthy figure. Ships net decreased due to depreciation. Our total long-term loans increased from 207 to 245 as we drew down on loans from IFC and Credit Agricole and also Exim Bank. We paid back our debentures in full. It was 126 at the end of 2020, and now it's down to 0. Total, so the book value per share is 9.21, up from 6.5. Return on equity is 34.61 compared to minus 3.67 at the end of 2020. Okay, so this over here shows the top row here shows the average age of ships in our fleet. So you'll see from 1995 to about 2011, we had a relatively elderly fleet. Following which we embarked on a program to we ordered a number of eco ships, much larger ships, and so the average age of our fleet came down to 5.8 in 2016, and now it's at 10.3. So you'll see over here the average age. The red line over here shows you the average size of ships that we have in our fleet. So that we had much smaller ships from 1995 until 2011, and then we ordered much larger ships, so the Supramaxes, the Ultramaxes. Now the average size of our ships has gone up to 44,000 deadweight. This line shows the time charter revenue, average time charter revenue that we've had for our fleet per day per ship. So you'll see that 1995, it was a very healthy 7,300 per day. Then you had the Asian financial crisis, it came down to 4,800. And then as China joined the WTO, it started to go up. You had the super cycle years from about 2005 to about 2008-9. And thereafter, you had a supply overhang. A number of ships got delivered between 2008 to 2016, and then every year you had, because of the supply overhang, you had a gradual decline in rates. Rates bottomed out in 2015-16, and then since then, supply pressures have declined, and therefore rates have gradually gone up. And I would say so. 2020 was a bit of an aberration. It's because of COVID that we had relatively low rates, but if it was not for COVID, 2020, of course, would have been a very good year as well. This line over here shows the operating expenses that we have for the fleet, which, as you can see, is relatively stable. Over here, we show you the total debt on our fleet and also the debt to equity ratio. You'll see that the debt was, so it increased in 2004. We acquired a fleet of bulk carriers from MISC. We paid down the debt down to 0 in 2007, and then we embarked on a program to order new ships. It peaked in 2016 at 482. And since then, we've been paying down debt, and it's down to a much lower level of 246 million. And the debt to equity ratio follows a similar profile. Similarly, for the debt to EBITDA, so it's similar to the total debt that we have on the balance sheet. It peaked in 2016 at 20.3 when we took delivery of a number of ships, and ever since then it has come down. So this is totally expected. This shows you the net profit and cash profit that we've had over time. So this year, our net profit was actually the third highest that we've ever had. So previous years we had higher profit was 2008 and 2005. The red line shows you the cash profit. So the cash profit is actually usually positive.
Second highest. Second highest in history.
Yeah, and it's also the second highest actually that we've had in history, the cash profit. This shows you the dividends that we've had over time. So from 2003 to 2014, we were consistently paying dividends. Our policy is to pay not less than 25% of our net profit as dividend. We reinstated our dividend in the second half of last year. Some our ESG. So I will just talk very quickly about some of the recent things that we are doing. So so last year we gave 60,000 free meals to the needy in Bangkok. We are signatory of the Neptune Declaration that covers seafarer well-being and crew change. We are in the process of providing $1 million baht donation to Michai Patana School in this quarter. We were classified with excellent corporate governance for 12 consecutive years by IOD. And so we continue to be certified as a member of Thailand's private sector collective action against coalition against corruption. So investor relations, it's been a very busy year in 2021 as the interest in the shipping industry is renewed. This shows you the shareholder returns since we did our IPO. So if you were an investor in our IPO back in 1993, you would have earned a 16.4% IRR. So by any standards, a very, very good return for shareholders. Some final food for thought. So demand is growing faster than supply, and this should be good for the next couple of years. And as we've seen, the supply side pressure is just not there. The minor bulks, which is the types of cargoes that we carry, are growing faster than other cargoes, and certainly faster than supply growth in the geared sector. Now, the geared ships are the ones that carry minor bulk. So we are a Thai corporate, but we have an international business. So COVID cases spiking in Thailand, weaker Thai baht, it doesn't hurt us. In fact, it helps us because our EPS is in Thai baht and all our income is in US dollars. So we are a Thai stock that's unconnected to the Thai economy, and only part of our Bangkok expenses are in Thai baht, and they would actually reduce with the weaker baht. Price to book value is not a good measure anymore, as asset values have gone up significantly by 100 to 200% since the start of the pandemic. Our debt continues to shrink, and surplus cash generated from our business continues to grow. This is, of course, good news for our shareholders. Would that be open for questions?
Okay, so coming to the questions which are already there. So the first question is, what would you think about scrubber systems now? So first of all, scrubber systems simply transfer pollution from the air into the water, and therefore they are anyways bad for the environment. So if you're a company that is concerned about profits, you will look at this as a solution. If you're a company that has got better values and you think that you should be kinder to the environment and look after it better, then you would say, even if it costs us more, we should look at the low sulfur option and not to look at the scrubber option. So we will never go for scrubbers. We don't care whether it makes us a smaller profit, but it makes sense for us to do that. Secondly, second question, will you change your mind to install scrubber systems into your ships? No, we will not do that. Thirdly, please update the similar or different on demand of Supras and handy sizes in Q1 versus Q1 2022. So Q1 21. So this year, the rates, if you look at the index ship rates, they are roughly double what they were at the start of last year. So much, much better this year, the first quarter compared to last year. Fuel expenses, why are they so low in Q3 and Q4? Because we've done mainly time charter business and very little voyage charter business. The fuel showed in the balance sheet again is at a low level compared to previous years, as I explained, because our ships are more on time charter than on voyage charter. The next question is, you started to fix one-year contracts on 4 to 5 ships since last year. Will you see any downturn coming after 2023 or any reason for that? We think that rates will continue to stay strong till about 2024, 2025, and therefore we are fixing 1 year at a time because that gives you the least amount of discount compared to the spot rates. If you were to fix today, for example, all the way to 2025, you get maybe $13,000-14,000 a day for your ships. Against that, if you fix at the spot rate today, it's $24,000-25,000 a day for Supras and about $21,000-22,000 a day for the Handysize. That's on the spot. And if you take a 12-month contract, you could do it on index linked, in which case you would get the index value straight away. And if you did it on a fixed price basis, you might get something at or below the current spot rate. Will oil price increases impact your profits? No, there is no impact to our profits or profitability from the higher oil prices. The next question, any more extra expenses expected for the case in Nigeria? Problem with the Nigerian case is that it is not yet resolved. Only once it is resolved will we be able to put together what has been the total cost. So till then, we really can't comment on this. The next question, will you plan to expand and buy more ships in 2023 when we would have minimum debt? No. Our plan is to continue to give away our surplus cash to the shareholders. Do you have any plan for retirement in the next few years? Yes. I'm 69 years of age this year, so there is a finite time of which I can continue to work. So yes, most certainly I will be retiring in the next year or two. And there are more questions now. Gautam will take the. Why don't you take that question?
Okay. So okay, what is the strategy plan for new regulatory for fuel oil ship? So the strategy is we are looking at zero emission vessels. We are part of the Getting to Zero coalition. So we're not placing any orders right now for zero emission vessels. We're still studying this. So as of when we do have a definitive plan, we will make an announcement. Will disposal prices for existing ships go to zero? That is highly unlikely. In fact, over time, the steel prices have actually increased, and we expect that trend to continue. In fact, so recycling steel is very good for the environment. It's far less pollution to the environment. So we expect steel from ships where the demand will actually go up over time. And so we don't see it going to zero. So the tensions between Russia, America, and Ukraine, will it slow down the demand in shipping industry or any impact? Take that one.
Yeah. So on this question, any disruption is always good for ton-mile demand. It makes ton-mile demand actually grow further. So we don't see this as a real issue. In the very short term, if there is a war, then there will be some blockade of those ports and exports from those ports will stop. But exports from other ports, which will take up the business which the Black Sea was doing, will then flow on a longer ton-mile route to the market. And therefore, it will be beneficial in the medium and long term to shipping. With that, we have come to the end of the questions.
นั่นก็คือคำถามทั้งหมดทั้งส่วนใหญ่จะมีหลายคำถามที่เข้ามาเกี่ยวกับในเรื่องของค่าน้ำมันว่ามีผลกระทบต่อบริษัทหรือเปล่าก็จะสรุปรวมๆว่าบริษัทไม่มีค่าน้ำมันขึ้นเนี่ยไม่มีผลกระทบต่อบริษัทเพราะว่าค่าน้ำมันเนี่ยลูกค้าเป็นผู้รับผิดชอบในเรื่องของค่าน้ำมันค่ะตอนนี้ก็หมดเวลาของการนำเสนอข้อมูลแล้วบริษัทขอขอบคุณทุกท่านที่ร่วมเข้ารับฟังข้อมูลในวันนี้ค่ะขอบคุณค่ะสวัสดีค่ะ